So you're thinking about hiring your first employee. That's a big moment. Your business is growing, and now it's not just you anymore. But here's what most people don't realize. Hiring someone isn't just paying them a paycheck. It comes with a few important responsibilities, especially when it comes to taxes and paperwork. Let's break it down simply. The first thing you need to know is that you become an employer legally. Once you hire your first worker, the government now sees you as an employer. That means you'll have to do three main things: pay your employee correctly, withhold the right taxes, report those taxes to the IRS and your state. It sounds complicated, but it's all automated once you set it up for the first time. The second thing you need to know is employee versus contractor. Before you even pay them, you need to decide, are they an employee or independent contractor? Here's the quick rule. If you tell them when, where, and how to work, that's an employee. If they control their schedule and tools, that's a contractor. Why this matters? Because employees, you have to pay payroll taxes. Contractors, there's no payroll taxes. Just a 1099 at year end. So what's actually in a paycheck? When you pay an employee, part of their paycheck goes to taxes automatically. You'll withhold federal income tax based on their W-4, Social Security and Medicare, that's called FICA. And here's the twist. You, the employer, match those FICA taxes. So if your employee pays 7.65%, you also pay 7.65%. That's part of being an employer. You share the cost of funding those programs. How payroll works in real life. Once your employee fills out a W-4, you enter the info into payroll software like QuickBooks Payroll, Gusto, or ADP. The software calculates taxes automatically, pays your employee by direct deposit, and files everything with the IRS. You don't need to do the math yourself. You just review, approve, and fund the payroll. Then you file and pay taxes regularly. So here's the part that trips up a lot of new business owners. When you pay your employee, you're collecting taxes on behalf of the government. That means you can't just hold it forever. You have to send it in on a schedule. For most small businesses, this happens either monthly or semi-weekly, depending on how big your payroll is. Your payroll software will actually tell you which schedule applies to you. Now let's break it down step by step. Step 1. Each time you run payroll, your system automatically calculates the federal income tax withheld, Social Security and Medicare, that's FICA, your matching portion, and any state taxes. Step 2. Those taxes are sent to the IRS through the eftps.gov, the electronic federal tax payment system, and to your state through its online portal. Step 3. You file Form 941, which summarizes how much you paid, withheld, or already deposited. Step 4. At year end, you'll issue each employee a W-2 and file a W-3 summary with the Social Security Administration. That's how the IRS and your employee keep their tax records aligned. And the best part, payroll software can handle all of this automatically, so you're not buried in forms. Now, what if you skip all that and just pay your employee in cash without reporting it? Well, here's the truth. The IRS treats payroll taxes as trust fund taxes. If you don't send it in, the IRS can charge you the trust fund recovery penalty, which equals 100% of the unpaid amount, and they can hold you personally liable. That means they can go after your personal bank account, paycheck, or property, or even if you have an LLC. And those penalties add up fast. Even small mistakes can snowball into thousands in penalties. Paying under the table isn't a loophole. Some new business owners think, oh, I'll just pay them in cash and skip the paperwork. That's called paying under the table, and it's illegal. If that worker files for unemployment, or you ever get audited, the IRS can reclassify them as an employee and hit you with all the back taxes, penalties, and interest, sometimes going back years. So it's never worth it. Always report payroll properly from the start. If you already messed up, like missed a deposit or forgot to file payroll forms, just catch up by making the missed payments through EFTPS, file any overdue Form 941s, and contact the IRS Business Collections Department to arrange a payment plan if needed. So the smart way forward is, if you plan to have even one employee, use payroll software that automates everything, or hire a bookkeeper or tax pro to set it up once, then let it run. Doing payroll correctly isn't about fear, it's about protecting yourself and your business. So in summary, when you hire your first employee, you're not just giving someone a job, you're stepping into leadership and responsibility. It might seem like a lot at first, EINs, W-4s, payroll systems, but once it's in motion, it's simple repetition, and that's when your business starts feeling real.